Bob, good to see you. It's interesting, this morning I'm seeing a lot of growth internet names up quite a bit. I mean, Asana is up 8%, Palantir, if that counts as internet, Roku up 6.5%, ServiceNow up nearly 6%. Does that tell us anything about resilience in this market or no?
So first of all, thanks for having me, and it's great to see you again, albeit virtually. Can't wait to be live back on the desk soon. To get to your question, yeah, I mean, I think you want to think, first of all, pull the lens back for a second. I mean, for the year, from the recent highs, the tech market's been down, the NASDAQ 17%, give or take, but a lot of the mega cap names, the larger names, down 25% plus. And with that, what you've really seen is multiple compression. First of all, in the broader S&P, that multiple falling from 22 times to about 19 times, more in line with the 5-year historic average. But in the tech side, particularly, the vast majority of the pullback of these names has really been multiple compression. So what we've seen in talking to our institutional clients is, at what point here is too much, and where can you start adding to quality names? And where we're seeing investors really focus are on names that are high quality, recurring revenues, strong businesses and balance sheets, and starting to really sort of nibble a bit here. But as we all know, there's still a lot of question marks left to the market right now. So people are still sort of on the sidelines trying to gauge what to do.
How closely are you going to be watching the impact on the European economy and perhaps companies, even mega cap tech companies that have large exposure to Europe? I mean, whether it's from an M&A perspective or just from a demand and revenue perspective, might that have an important impact for investors to watch?
Absolutely. In fact, what we've been doing not only today, but over the last several weeks is getting in touch with our corporate clients, right? And really helping them think through, if there is an invasion, what would that mean, particularly on your supply chain, raw materials, would there be any impacts there on revenues, to your point, being able to sell, having sanctions, would those be impacted at all? And then quite honestly, across your capital structure. Do you want to bolster your balance sheet at this point? Do you feel like you are fully funded to free cash flow positive? And then lastly, we're also helping them think about, if there is a continued pullback in the markets, are there M&A opportunities that become very interesting? You saw what Microsoft did recently with Activision. And John, as you know, we're coming off the record year ever in M&A, almost $6 trillion of M&A. And what I think is really interesting there is there's so much private capital around as well. So PE was $1.5 trillion of that $6 trillion last year, and has over $1 trillion right now on the balance sheet sitting there. Venture capital, as you probably know, doubled its deployed funds to $600 billion from $300 billion typically. So there's a lot of capital there that could drive that M&A. And as bankers, we're really trying to help our corporate clients really think through all these machinations.